So with 10 years in customer service, coaching, and development industry, he is passionate, again, about helping individuals become better versions of themselves. Having been with the EQRP for almost 2 years, his role is to help educate and empower individuals to take back control of their retirement with peace of mind. Please help us welcome our partner, Mr. Parker Purcell.
Awesome.
We like to do jazz fingers.
I appreciate it. I'm gonna do a little sidestep here. I've got my slide deck that I can control to where you don't have to keep changing it, so I can just keep flowing through it for you. So if you want to, I'll share my screen real quick and get it pulled up.
Perfect.
And then we'll be good to go. Can you all give me thumbs up if you see it?
We see it.
All right, perfect. Well, thank you so much for allowing me to present tonight. As she said, I am coming up on my 2-year anniversary here at the EQRP. November 2nd, 2020 is my start date. So election day 2020. And then from there, I had former kind of experience in Chick-fil-A. I worked there for almost 3 years, ran a store down in Pensacola, Florida, came back to my family business for about 4 years, and really kind of through those times in my life came to understand like my passions, my strengths, really how I can use myself to benefit, we'll just say the world, right? And engage people. And coming here to the EQRP is by no happenstance. I truly believe that I'm here for a reason. I'm called to the work that I'm doing, and I get to use my gifts and abilities to help share the message of financial freedom. And so for me, I always love the opportunity to come speak and help educate. I think that's what's important. First is understanding that, education is really how we free ourselves. When I look at myself, some years ago, I thought that my only way to financial freedom was just, well, I'm going to get promoted, my salary is going to increase, and then maybe one day I'll be making $1 million a year. Hopefully, I don't know how. There's no plan. Like I had no plan. That's really what it is, and I had no education. And then coming here into the EQRP, really what it is, it's an ecosystem of just savvy entrepreneurs, people who are hungry for change in their life, for transformation. And I'm one of those people that have experienced that firsthand. And I like to say, like, my trajectory before coming here was probably like this, but since stepping in the doors and just rubbing shoulders with Damien every day, like, I've now just tremendously I'd say changed my future for the better in much shorter time than I ever thought possible, just because I had the education. So happy to be here, happy to share. And what the EQRP is, what it stands for, is Enhanced Qualified Retirement Plan. And it's just our fancy terminology on a self-directed 401k. When people ask, like, what is the EQRP? It's a self-directed 401k for individuals and small business owners. So we'll get into kind of what that looks like. But really, I think the main focus here is to understand these things that we talked about at the beginning, right? Like having more control, understanding just traditional structures of what retirement accounts look like as it is today. And really, a lot of times you just take what you're told and you never go dig deeper because your CPA has said, yeah, just open up a traditional IRA and just put money in there, or go give money to your financial advisor and do what he says. But there's this part of you that kind of fights against that because you're like, well, I see these people doing this, but how do I do that? And they're like, well, just kind of stay away from that if you don't understand it. So, there's like I said, like being around Damien, like that's what he did to me. He pushed back against my paradigms and beliefs and like shifted it in a major way. And not just mentally, I had to take action, right? And so the fact that you're here, those that see this replay, you're here because you want to take action, and I'm here to help hopefully enlighten you and change some of those paradigm shifts. So I like to visually use some graphics to kind of help portray this message of who we are. I think you all know who this is. This is William Wallace of Braveheart. And this is what our company does every day as we step out into the stream of people that are kind of just doing what and want to help liberate people and free them from that financial bondage. So we're all about freedom, all about control, all about that flexibility that you have with your retirement to get to where you want to go. And our mission is to help free and break the financial shackles of over 1 million people. And so it's an aspirational number. I feel like we can for sure get there, but we got to put something out there like a target to shoot for, right? And we feel like 1 million people inside any type of ecosystem creates a movement, right? You look at influencers online that have over 1 million followers, or these, you look all over the space. And if there's 1 million people following somebody, there's a reason why they're doing it. And we want to be able to help give people tools and get these 1 million people more tools in their hand to be more financially free. Because guess what? They're going to go tell their communities and their networks and their investors and their parents. And I mean, you kind of can do this cascading effect, right? So who are right? Who are the ones that have control over you? Well, really the politicians, right? In Wall Street. And so this was a picture I grabbed right after they signed the Inflation Reduction Act. And, if you look into what the Inflation Reduction Act is just as a whole, it thus sent us into more inflation. If you looked at the student debt that was canceled, this isn't a play one side or the other, red or blue or whatever. It's just, let's look at facts as they are. $400 billion was just thrown into the economy with zero productivity. So what is that going to do for those that are still paying debt? And then the next year, the college institutions are saying, hey, well, we're just going to charge more because the government paid it off. So we'll just, make our tuition 20% higher. And, that goes the rest of everything that's attached to these entities, right? So for us, we got to figure out, how do we get out from under this? We got to figure out more creative ways to protect our money, right? To preserve it. Because the reality is taxes aren't going to go down. Taxes are only going to go up, and they're only going to be looking for more and more ways to continue to tax you. So they and the IRS are one of the biggest shackle holders out there in Wall Street. So every time you throw $1 in the stock market, this is what Wall Street does. They are super happy because you are padding their country club memberships or Ferraris. Whether your portfolio goes up or down, they're still getting paid, right? And that's not fair. It's just not fair. I've had so many conversations with people lately that are frustrated because they're watching their retirement dwindle, yet they're still paying somebody to manage it, and they're still paying these people to manage it, right? And so we've got to figure out another way to put control back in your hands. But really the biggest thing people look for is just that support. But they're looking for this opportunity. And I think that the current traditional structure of retirement is much like prison. These guys are sitting here, they're eating the same thing every day. They are sitting in a cell every single day. They're told what to do. They're on this routine, this cycle, and they have no hope of getting out, right? They look outside the prison bars and they're sitting there thinking, man, I can't wait to eat a cheeseburger. I can't wait to go hang out with my kids or just go on a walk and not be here. But the reality is that's what Wall Street does to us financially. They put us in this system of thinking that we can't do it. And then they say, well, this is what's best for you. Just continue to do this. And then at some point you'll get to where you want to go, but it's all based on hope, right? You don't have control. You're putting your control in someone else's hand. But what if there was another way, right? What if you could take that money out and have all that support and coaching to help you say, okay, I can do this. And the reason I say you can do it is because I'm doing it. And I promise you that 2 years ago when I walked in, I didn't even know what an IRA was. I didn't even know what a 401k was. I didn't know what any of this stuff was, right? Because I was one of those people. But now being brought in, understanding that, these structures can be used as a great tool to get to where you want to go. And that's really the goal. And you can have more certainty, like Steph Curry shooting a three, that you're going to come out on top, right? Every time Steph shoots a three, you know, he ain't missing. Like, he knows he's making that 8 out of 10 times. And it's really game theory when you think about it, right? So, if Steph was to give the ball, like, if we're just going to use this as an example, like, do you think that Wall Street's going to make that three for you? Like, if you're got the game on the line, you're like, man, if we do this, we'll win. It's like, not so certain. But if they give you the ball, do you feel like you could probably make it? Yeah. So we want to give you that certainty that Steph has. And that's what our team's here to do, is really help get you to that point to be more confident, more educated, to make the investments that you want. So, the EQRP, just laying some things out for it's a private retirement checkbook. So it's set up like a bank account. You can fund deals in as little as 5 minutes. So, these wonderful ladies here have an opportunity and you've got access to your retirement. Well, guess what? If you have a traditional 401k that's just sitting in the stock market, you can't move it. It's just going to be there. You're like, well, I want to take this and move it. No, can't do it. Well, I've got, this thing sitting in an IRA. Well, can't do it unless you maybe put it into another vehicle. But then with IRAs, you got to run through all the hoops and asking permission. And, it's a sticky process, and you don't have to do that. We build in asset protection for your assets that you're investing in outside of the market. There's also no taxable events when you're looking at using debt inside of the 401k. And we'll kind of lay out just a basic case study of what the traditional structures look like with the self-directed IRAs and the self-directed 401ks. And if you're a business owner, so if you have employees, you don't lose the ability to be able to self-direct your retirement. Instead of dumping that money into your company plan, you're obviously providing a great benefit for your employees, but when you put that money in, that you aren't going to be able to touch it, and you aren't going to be able to grow that at the rate that you could with your investments outside of the retirement plan. This gives you the best of both worlds. You get all the tax savings by dumping it in, and then as a business owner, you also get the control to go invest in real estate. So if you're going to compound numbers, and I honestly think this is probably a good average over the macro, what is your stock portfolio going to get you over the course of time, right? Maybe 5% net after fees and everything. And I mean, personally, I think it's a very mid to low single digit number if you were to play it out. But then does that even beat inflation, right? Like, have you beat how much money that the government's poured into the economy? Probably not. So if you're able to invest in real assets, right? Like real estate, precious metals, crypto, private lending, I mean, you name it, your options are limitless. You're going from, 5% to 15, 20, 25, 30%. There's a lot of really great deals out there in real estate you can get into. So you've now compressed 6 years of earnings in the stock market into 1 year. And now you go and think about that in perpetuity now, because you have control. You go 6 years, 12 years, 18 years, over a 3-year period, you have just supercharged your way 18 years to financial freedom because you've taken action. And that's what we're here to do. So, like I said, you got options you can invest in, like real estate, global, gold and silver, Bitcoin. Crypto is really hot. Don't get me talking on it, because it could be a hot topic, but I love it. I think there's a lot of really cool opportunities out there. I do think that a lot of our future is going to be in the metaverse, Web 3.0. And I would encourage education in it, because I think that we are at a really cool point in time where the metaverse, crypto, and when I say crypto, not all the crazy stuff that's out there, but like Bitcoin, Ethereum, these things are being built. It's probably the single greatest wealth generation opportunity of our time. And so the more we understand of what's going on, we have the opportunity to be a part of that. And so you also would now be able to be a part of that through your retirement, which is really cool. So let's walk through a case study real quick. Self-directed IRAs and EQRPs, not all retirement accounts are created equal. There's nuances to them, and it's our job to make sure that we understand which tool is the right to use for your investing strategy. And so think if you were a cook going into a kitchen and you said, I want to cook something tonight. All right, well, you look into your cooking toolkit and all you have is a hammer. Well, guess what? Hammer's probably not going to get you far. You might be able to like stir a little bit with the handle, or you might be able to, I don't know, crack an onion or something with it, but it's not the tool that you need to cook, right? So when it comes to alternative investing, the same thing applies when you're looking at IRAs and the EQRP. You know what the EQRP is the complete tool chest for the alternative investor. Why? Because you're not going to get taxed on debt, less red tape and hoops to jump through, so you get to act a lot quicker. There's the flexibility in your ability to run into some of these different assets without, like I said, asking permission, moving real quick. There's asset protection built in. So there's a lot of things just inherently that make them different. And this is, one of them. So when you're looking at contributions, you're looking at a significant amount, because with 401ks, depending on your income and how much you earn each year, you have the ability to put up to 400,000, which is just a combination of the maxing out your self-employed part of it, right, up to the 67,000. And then, we have a lot of high income earners in our community that vary, but they're looking for other options. So what they could do is open up a cash balance plan and then still dump more into it. So through this, they have the ability to contribute so much money. Then you're looking at the tax implications. So debt is not going to be your friend with an IRA. So if you want to invest in real estate, you just shouldn't use an IRA, because if you're going to syndications, you're going to be taxed on any debt that's used. And let's be real, like real estate is built on debt. It's not built on cash, because why? We want to take that cash and we'll put it towards other things, so we have more ownership, and then just continue that snowballing effect, right? So debt is going to be your friend inside of the EQRP. Your cash isn't locked up like it is in the IRA, and you're not going to be taxed on it. And that UBIT tax with the debt can be very costly. So we'll show you what this looks like, right, from the standpoint of how these tools work to your advantage or against you. So this is a deal that we did out in Texas, a client of ours did, and the purchase was $50 million for this asset. 10 million was put down and 40 million was used in debt. So it sold for 70 million. So because we used 80% of the purchase for debt, that 80% now is going to be taxed equal to profits up to 37%. So 80% debt was used. Now 80% of your profits are going to go owe tax up to 37%, which this individual who used 100,000 from their IRA to get in on this excellent real estate opportunity now has cut their return significantly down by a third, almost, right? 25,000 plus dollars they have to owe Uncle Sam just because. Now, that's because they have the wrong tool. They don't have to pay that, right? There's other tools out there like the EQRP that says, hey, guess what? You can use debt, and now you get to pocket that $25,000 back into your retirement account and go put that in another syndication, right? So let's use these numbers in perpetuity, right? Think of if you did 2 or 3 deals a year and you were throwing this money back to the government just because you didn't know any better, right? Like it's education, it's knowing what's out there. And so now you're looking at, over the course of time, saving yourself tens, hundreds of thousands of dollars in your real estate investing. So that's, and a lot of people come to us with this very thing, and there is hope. This UBIT tax kind of laid out, it stands for unrelated debt financed income that triggers the unrelated business income tax. And the EQRP is exempt. And you might say, well, why is it in the IRA and not in the 401k? It's just how they wrote it, right? Who knows? That's just how the IRS plays, and that's how they built it. So it doesn't exist in there, and debt is your friend. So if you're using an IRA to invest in real estate and you already have, you may be asking, well, there's no hope for me here. And funny enough, a guy that just came into our community a couple of days ago had a house that he had bought all his cash, in his traditional IRA because he didn't want to pay the tax. I said, so how much did that house cost you? And he was like, well, $300,000. And I was like, okay. So what if, your goal is to sell it, right? He's like, yeah, I was looking to sell it next 6 months, 6 to 12 months. So now you could take that and move it over into an EQRP and now refinance that house, pull out $200,000 and go invest that in other assets and still sell the house and get profit off of it. Right. And so what happened there is he had $200,000, $250,000 he just recreated out of thin air because he was able to utilize the EQRP and the tools that are there to get to where he wanted to go, which is awesome. So you don't have to pay that nasty tax. So when you talk about who's qualified, the way 401ks work very simply is that there has to be business activity that sponsors the plan. So anybody can qualify. I've got 2 side businesses that I'm working on myself right now that qualify me if I was an individual. But because I work for the EQRP, we have our own plan. Any money that I earn from the EQRP, I put into that. So if any of you out there have W-2 jobs and you have a retirement plan there, the reason you can contribute is because you are generating business activity that subjects you to income. So you're paid from the employer. They have a plan. Now you can put money into that plan. But you can have multiple 401ks, but they all have to have their own business activity. And any money that would go into that plan has to come from that business activity. You don't have to have money to qualify. You just got to have the activity. So I could sit outside my front lawn and sell lemonade for a quarter to kids that come by. And if nobody buys, guess what? Still qualify because I'm doing the work. They don't have to buy. So I'd be able to take other plans and move them in. But we'll kind of get into that in a minute. But when you're looking at funding, you can do really our people come in this network to do 2 things. They look to roll other accounts over. So if you have an old traditional IRA or TSP or 401k, you can roll that into this plan, utilize that, or you can contribute from business activity that you have. So if you're a 1099 or you own your own, S or LLC, S Corp, and you pay yourself from it, you can do that as well. And people do one or the other or both, but that's how you put money in. And there's a deferred and Roth component too, which is great. So I think this is also important to talk about too, is that one thing I hear a lot in the real estate community, and it makes sense, is, well, I hate retirement plans because my money's locked up forever and I can't touch it. And I'm like, well, do you know you can't touch it? Or is that what you've been told you can't touch it? And I'm like, well, I thought you can't touch it. Oh, you thought, you don't know. So I'm going to tell you how you could do that. So you're going to pay income, you're going to pay taxes on your money, right? Like any dollar you ever make, you're either pushing it down the road to pay at a later time, or you're going to push it to your kids. So at some point, like, there's going to be taxes paid on money. But a really cool way that people don't think about is with this in the EQRP, and I'll show you kind of a really cool case study here in a second of what one of our clients did, is that you can convert dollars into Roth. So now that is completely tax-free, right? You're never going to pay taxes on that again. And let's just say I converted $100,000 to Roth. Now that's basis, meaning that I can pull that money out at any time with no penalty, no income taxes. But I also, since I'm not going to pull it out, I can grow it, everything on top of that $100,000, completely tax-free. So I'm looking at, okay, so let's say I had another opportunity come out in my real estate business, or I wanted to, I had a taxable event happen that I needed to offset some of my income. You could pull out basis from your retirement plan, that $50,000 you've already paid income tax on. Then you could go put it in a syndication, get the bonus depreciation, and offset yourself from that taxable liability. And you got to pull that from your retirement account. And so people are like, I didn't even know you could do that. I'm like, well, guess what? Now you know, what are you going to do about it? Right? So those things are important. And one of the big things that we created this year and are really pushing for, because I feel like there's a lot of shackles to be broken in the corporate space, is the safe harbor. And so business owners with employees, like I was saying earlier, have no idea that they can access all this capital sitting in their business to be able to fund. So think about that if you're growing your own syndication business and people in your network who may have businesses with employees. Like, what if these people knew that they could access the, 1 million, 2 million, $3 million, whatever they have in their plans they've contributed. They may have, less, but typically with a business, they're putting a lot in there because they're funding their employees too. But you have the ability to tap into that. And as a business owner, for me, like I was talking about that compounding earlier, they think that money's just gone when they put it in. They're just hoping that it turns out good for them at some point in time. But when you talk about compressing that money in that 6-year increment, like I was saying, right, based on these returns, like that's going to pique their interest. And they're going to want that, because now they're like, oh, so you could still invest in the stock market if you wanted to, but you also now have that complete flexibility to get out of it. So if people that were seeing what was happening now coming 6-8 months ago, and they were like, oh, I'm not feeling good, I think something's going to happen, they're not hoping. Now they can act because they have the right tool to do so. And that's what we do, because we want them to get out of Wall Street, because the reality is Wall Street's not there to protect you. They're there to just make money off of you and, suppress you even more in your financial freedom. And we're here to just help, like I said, educate against that. So, business owners now have no more custodians. They have that complete checkbook control, get to escape that UBIT tax, which, we don't like, obviously. So debt's going to be their friend for all these real estate opportunities they're looking to get into. And this is what I was talking about earlier, is that we had a client of ours that her husband was a real estate professional and she was a dentist. And so they wanted to convert 300,000 of the EQRP to Roth. So when they had bought a $1 million building, they had 300,000 of bonus depreciation. So because they did a Roth conversion and they had that bonus depreciation, it offset. So they just essentially converted 300,000 completely tax-free into Roth, that they're now growing completely tax-free for the rest of their retirement days, right? Or they could pull that 300,000 out at any given time to go use for anything they may need. Let's say their car breaks down, they need to buy a new car. Well, like, I converted this to Roth. Now I can pull this out and go buy myself a new car with it. Or I can go put this into my own business because I want to, generate some more taxable, some positive taxable events for me with the bonus depreciation on the outside. So, like I said, it's getting creative, understanding how this thing works, being able to massage it, maneuver it. And
So
this was
can I
also
ask you a
really,
question?
yeah, go ahead.
Could you go back? So
Yep.
what's the explain number 2?
Yeah, so converted 300,000 of their EQRP to Roth. So they wanted to go ahead and pay income tax on that money. And so once it's converted, it's now realized as money that's had taxes paid on it. But because the provision inside of Section 401, they say, well, once you've converted this money into Roth, now everything that grows on top of it is completely tax-free. So everything now that you're investing in real estate, those 15, 20, 30% returns you're getting, you're not paying a tax on it ever. No capital gains, no income tax. Like, you're compounding that 300,000 now into Roth completely. There's different strategies to do it. Some people do it on, all up front, or they do it over a 5-10 year, like whatever works for them, right? This isn't meant to be a robotic type thing. It's meant for the individual. So that bonus appreciation event that they had, they can set, because they're a real estate professional, they can use that against their income. And so that 300,000 that they converted was recognized as earned income. And then now they just negated it completely.
Mm-hmm. So it is tax. Had they not done the bonus depreciation step of the strategy, It would have been
Correct.
taxed as income.
Correct.
Okay.
Yep. So important to understand and know, which I think is, like I said, really great. This is a picture of Damien as a male model for JCPenney. And people with businesses also don't realize that there's an ability to grow their children's retirement account completely tax-free by contributing to what's called a KROS. So you have the ability to contribute like $12,950 a year into your kid's account for business services rendered and write that off as a deduction. But you can also, that money that's put in there, because they're not paying any type of self-employment income on that because they're children, is looked at as Roth. So now it's like I like to say it's a better 529 plan, because you can go, put this into other alternative investing and grow that at a rate that you control. And that everything you're putting in is basis. So let's say I was a dentist, or I had a construction company, or whatever the case may be, right? And I had 3 kids that ranged from baby to 5 to 10 years old. They could be doing any type of work for my business, whether it be modeling, for photography, or, cleaning toilets, or you name it, right? It's got to be justifiable work, but you could contribute that to their own plan. And by the time they get 18 and they're going off to college, right, they have all this money that's been growing and building up in a tax-free standpoint. So you have to pass that on to them, but everything you've put in is basis, which means you can pull it out at any time. So, if you were 5 years old and you contributed, 10, 15 years of $13,000, you're looking at, I'm just running raw numbers in my head, $180,000, $200,000. This basis that you could pull out to pay for education, car, whatever, like student housing, you name it. And then now they've got this tool that they have that's been growing. So everything on top of that $180,000, we'll just say, is they're going to have to continue to grow until they retire at 59 and a half. And they also have this tool as they grow their own businesses to contribute to it too, right? So it's another really cool thing that a lot of business owners just don't understand or realize, that there's a lot of really good tax implications there that you can take advantage of. But the whole point is control, right? You have control to put that money in and do some cool things with it. So that is really all that I've got. I think the best thing is kind of open up discussion. You were talking about earlier, questions are where the meat is really found and the gold is found. And so I want to be able to answer any and all questions, talk strategy. I mean, throw it all there at me. Hopefully can answer just about everything. If not, then I'll find an answer for you. And if you're interested in getting one of our special reports, for those that are watching, you can text EQRP to this number below. We'll send you a special report that just kind of walks you through what the EQRP is. We'll send you a book free of charge, you name it. But we want to get this information to you. So,
well, actually, we should have them use our link. So I don't know if you have it available, Pam, so that they know that, that they came through our referral.
Perfect. Yeah.
Yes.
And you send, if you want to, you can send it out through the, when the replay goes out, you can send it to the, group.
We do every month when we send out the replay, we include the link to our direct link.
So what I'll do is, before, I know Melissa couldn't come off of mute, but she did type in a question. So we'll start with you. I have some questions that I've written down as well, before I dive into my questions. And she wanted to know how she could use her retirement money without getting taxed. So you did address a couple of strategies during your presentation. But Melissa, do you have any other questions with regard to that before we move on? I know she has to type, so I'm going to try to get her. Yeah. While she said no. Okay, good.
That's good. Answer the questions.
She said it was covered. Awesome. And then there was learn what the advantage of the EQRP is versus the other self-directed IRA accounts. Did he address that in detail enough for you? He did touch on some of the differences between that as well. Do you have any additional questions on that? And you have to tell me how to pronounce your name. Is it Sufai? Is that correct? Can you come off mute or no? Or you can type.
Well, I'll even hit on it real quick just to recap. So IRAs are retail driven, meaning that anybody can have them. So if I'm a dog that makes money, I could contribute. Or if I'm a TikTok influencer making money, I could just throw money into, a retirement plan. Even I can use EQRP money to put inside of an IRA. They're retailer driven and they're driving you. And the reason it's set up like that is because they want you to put money in the stock market. Like that's why they did it, is because they make money off of you doing that. So the EQRP, what is structurally different about it, even versus the other solo 401k products out there, is the fact that you've got asset protection built in. You can have it with employees too, which is people growing their businesses. You lose all that ability inside of a solo 401k structure. Once you have a part-time employee come on, you have to shut it down and go back into Wall Street. Nobody wants that. IRAs are set up to have fiduciary oversights. So you've got to be able to have somebody manage your account. And even now with self-directed IRAs, there are these checkbook controlled LLCs. They tell you you have checkbook control, but you really don't, because you have to make somebody else manager that's not your parent, spouse, or child. And that happened this past November when they ruled against the self-directed IRA market, because someone acted out of compliance. They said, we're just going to make it harder because there's trillions of dollars sitting in Main Street assets. And what they're trying to do is pull that money out. They're trying to pull that money off of Main Street and put it back in Wall Street and just continue this cycle. So the self-directed 401k structure and just 401ks in general offer you more flexibility to be able to maneuver, because you're the trustee of the account. So that's why, if Nikki and I were chatting and say, hey, Parker, you want to invest in this opportunity? I've got one spot left and I was just thinking about you and it's closing in 2 days. Well, guess what? I could say, hey, send me the wiring instructions. I'll wire you my money now. With self-directed IRAs, there's a process that's involved. You got to call someone. They have to sign off on it. Like, these opportunities come and they go. And, when you miss out, you miss out. Like, there's no going back. And you got to make sure you have the thing that gets you from A to Z as quick as possible, and the support, right? If you have an opportunity come and you don't know much about it and you want to know more, guess what? These companies aren't going to tell you about it. But that's how we've built our model and our structure. Like, I get paid to educate. That's what I do. I educate you. I help Pam do what she wants to do. She has a question. My goal is to figure out how. It's not my goal to tell her what to do. If she says, Parker, this is what I'm looking at doing, I'm going to try and poke holes in it, make sure it's clean, make sure, she's not setting herself up for failure or the IRS coming after her, whatever. If I see something that's disqualified, that's the only time I'll tell her no. But my goal is to help get her to where she wants to go and think creatively. And I think that's really what separates us from everybody else, is that we're very, we have the right tool that gets you there the quickest, with the support that makes you feeling confident and validated in the thing that you're doing.
That was great, Parker.
You feel it? I get passionate. I get on a soapbox. Like, it makes me mad. Like, I'm not saying all financial advisors, these people are bad. There's good people out there, but
no,
the more you lean into these systems and structures and how they're built, and I mean, it's sad. I had a business owner the other day. I kid you not. It was sad watching him, because the way he was communicating to me was, he said, Parker, he's like, I've been told my whole life that I was supposed to do it this way. I was in this cohort of other business owners that were doing it this way. So I figured, well, I guess that's what I'm supposed to do. And he always had this appetite to want to do it different, but didn't know. And he's working with, great financial advisors, great accountants. And he's like, and then I come across you guys and you're telling me that I can do the very thing that I want to do, and these guys are saying that I can't. Like and so this is where his frustration mounted, and this is where the paradigm shift happened for him. Is he's like, why have these people been telling me this for so many years and they have never heard about this? You know why? Because they make money off of your money and they have no incentive to pull it.
We're conditioned.
Yeah.
We are conditioned. It is a cycle.
$30,000 a year he's paying these people to manage his money, and he's watching it go like this. So not only the frustration of him losing all this money he's been dumping into his business, but now that frustration of I'm still paying you a percentage of my fees, like my money, to like
lose it.
Yeah, lose it.
Yeah, but the thing is, you're paying them to lose it, but they're still getting paid to manage it.
Exactly.
Yeah.
So, it's tough, and that's the thing. It's the control factor, right? Like you're always going to bet on yourself. Like, look, I can't play hockey. I'm not that good, but if there's someone that knew a little bit more about hockey than me, and you gave me a stick, and then I was like, well, you know what? Like, I can go do that. I'm gonna go learn how to do it myself, right?
Exactly.
And I know that I'm going to learn, but all I need is a good coach, right? Like that's all. If I was to go around this room and ask every single one of you, our biggest influencers in our life and mentors, you look at them are our teachers. Teachers are the most influential people in this space. Teachers of life, finance, you name it, right? That's how we learn and grow. And when we empower others to do our thinking for us, right? We take the teach a man to fish, he fishes for life, give a man a fish, he eats for a day. That's what people do. They're just given fish and they eat for a day, and then they go back the next day and they're like, feed me. Like, yeah, feed me. All right, one fish. Well, I'm hungry. I want 4 fish. Nope, 1 fish. Okay. Like, guess what? I'm gonna teach you how to fish.
It's a vicious cycle. It really is a vicious cycle, but it's to keep the economy where it is as well. So it's been conditioned from years upon years, So to break the barrier, you have to come into rooms like these where they're willing to share the information openly and freely. That's the next thing. I mean, it's just no excuse anymore to me. There's so many things out here now that we have access to. There aren't, as many restrictions as it used to be. So at this particular point, it's just, the onus is upon you. What are you going to do about it once you get the information?
Well, if you just want real, like looking at someone who has taken the steps himself, like we're all met with an opportunity. And I'm sure, Nikki, you got your own story. Pam, you got your own story to where y'all got to where you were. It started with taking action, and there's risk involved, right? But I took a HELOC out of my house, never done it in my life. I was like, what am I doing? Like, I've got all this equity sitting in my house, but I'm like, you know what? Like, I got to do something. Like, I got to try. And so I took a HELOC out and I put it in an investment. And guess what? A very, very conservative 5x return multiple on my investment. And that is how your money works for you. And now I'm like, wow, 3 to 5 years, guess what? I'll pay that HELOC off. I'll have house money because the bank gave it to me. And that's how sophisticated investors win. Sophisticated investors, y'all need to retweet this after you hear it. Sophisticated investors do not retire off of Wall Street assets. They retire off of Main Street assets.
That is for sure. That is for sure.
Retweet
now, there was one last question I wanted to get to, how to use debt tax-free. You talked on that a little bit. But do you feel that there's any additional questions that you have on that before I move on to my question?
No, I think it's just understanding that, know that in an IRA, debt is not your friend. If you're going to invest in real estate, do not use an IRA, 401k all day.
There you go. Now, my questions. I saw that you had on one of the slides that you could, I think, contribute like 400K or something in like 6 years or something like that. Now, I know with a regular IRA, you have limitations on what you can contribute annually. And I believe, if I'm not mistaken, with the 401K, it was 65 before 65K or something like that. That was your max contribution, but you talked about another strategy that you could use to actually dump even more. Can you elaborate a little bit more on that? Because I'm interested in hearing about that.
Yeah. So, I mean, business owners, and that kind of goes into higher net worth individuals that come to us that, first off, max out their 401k structure, right? For you as an individual, right, you have the ability to put in up to 67,500. That's with the catch up. But if you're under 50, then you've got 61,500 available to you. So after you've maxed that out, they're like, well, dang, I still got all this money I need to put away. There are these other tools called cash balance plans, which we're not really here to talk about that, but really what it is, it's just another vehicle for you to dump even more money into it. And won't get into the weeds about it, but you're making basically probably $500,000-$600,000 a year. And it's just another way for you to dump that out. And then what you can do is after you max out this plan or want to dismember it, you can take that and move it into your 401k. And then once that money's in your EQRP, you now can, take all this tax deferred money you've additionally put in and self-direct that. So that's what we mean by that. And with IRAs, yeah, they're 6,000 a year, 7,000 with the catch up. And that's just dummy talk, because I'm like, okay, so 7,000 a year, like, where's that going to get me? Like,
exactly.
I could spend $1,000 on dinner with my wife if I really wanted to go out one night.
But that strategy is typically for somebody who's making 500K or more.
Mm-hmm.
That's your bottom line to actually look into something like that.
We run illustrations. Like I said, it's not all the same for each individual. But typically that's what we see, about 500,000-600,000 for it to make sense. So that's our strategy with it.
Okay. I mean, I'm always interested in hearing additional ways that you can dump your money. It's called a tax shelter.
Yeah, absolutely. Yeah. And too, like I said, it's another tool. It's another strategy. I'm not saying it's the end all be all, right? Some people may take that 500,000 and go put it in other alternative investments, right? But at least in here, you aren't having to worry about the 1031s, right? Like making sure that you're always keeping this money moving, kind of pushing those events down the road. In a retirement account, once you put that in a deal and it exits, then you can still be patient and find your next deal and not have to worry about 1031 that elsewhere, because the tax rules don't apply.
He just dropped a whole nugget. An entire nugget. Okay, and then I also saw that you can roll over. I'm always coming back to this question, and I'm sure Damien will tell you this. You can roll over your money from the TSP to your EQRP. So has some rule or something changed? How does that work?
Well, you've got to be terminated from service. So if the non-governmental TSPs can't move over. So if you have a non-governmental TSP, it won't be able to move. But if you're a former military, we have a lot of former military people come to us, and they take their TSPs and just roll them over.
So terminated from service, or you basically are leaving. You're resigning or something like
Correct.
that.
Yeah.
You can't be actively in the government and do that strategy.
Correct.
Okay, I just want to make sure nothing changed. I always come back to it. Do you guys have any questions? Because I have one more before if you have a question, go ahead and drop it in the chat. So tell me how this K-Roth works for the kids.
Okay.
Now, is that like a special type of retirement account that you set up for the children, or you have your own EQRP that you set up, right, which is the solo 401k, and then you contribute the money in there? How does that work?
So let's just say that me and my wife had a mom and pop shop, but I like using dentists because I grew up in a small town and the illustration works well. So Dr. John O'Brien, that was my dentist. He had 3 kids, and I would see billboards up around town of his kids smiling, saying, "Hey, come to Dr. John O'Brien's dentistry and get your teeth cleaned. So guess what? That kid is marketing material. And guess what? Me as a business owner, I pay for marketing material. So now what I'm going to do is 1099 my kid and say, hey, thank you for your services this year. I'll pay you $13,000 for work rendered this year. And I will also, as a father, because you're 5 years old and you don't know what money is yet, I'm going to put this in an account for you and start growing it. And every year that I'm putting that money in, I'm getting it as a write-off first, right, from my own personal deduction. And then secondly, that money is looked at as completely tax-free. So now I'm growing that for them. Once they hit 18, everything I've contributed to that point, which is basis. So if I contributed $100,000 to that point, that $100,000 I now can pull out at any time completely tax and penalty free, because that's the way that basis works with Roth. But everything that's grown on top of that money, right? So let's say I had $120,000 in there, that $20,000 that's grown off of that, and I'm just using arbitrary numbers, right? But that $20,000 I could not pull out until I was 59 and a half, because it's considered that money was grown off of tax-free money. But if you did pull it out early, meaning before 59 and a half, then you'd have to pay income tax and the penalties on it. But but everything you continue to put in over time is basis, and you could pull it out at any time you wanted.
I guess what I'm specifically looking for is, what is the vehicle that you're putting the money in? Is it a K Roth? Is that what it's called?
Yeah, it's called a K Roth, but it's an EQRP plan. It's a self-directed 401k.
Okay.
And to piggyback on that, because that was my question that I was going to ask when Nikki was done asking her questions, it was about the K Roth. So it's a separate account.
Yeah, so you, and like I said, keep it simple. You as the parent, you're paying your kid. You would have you would be co-trustee of the account, right? Because they can't operate it, but you can. So you could be able to control that money and invest it in things for them and grow that. And then over the course of time, right? It works the same way as an EQRP. The provision is called a K Roth, meaning that you can contribute up to that $13,000 per year, pay them, right, for services, and they don't have to pay income tax on that. Because once it goes into the plan, it's tax-free.
Got it. But is it a separate EQRP account?
That's what it is. That's what it sounds like.
Yeah, I mean, it's a separate bank account, but it's an EQRP. The structure is all the same.
But you're setting the same process I went through to set up the EQRP with setting up the trust, and all the entity, the trust, all of that repeats itself, but for the child's account.
Yeah, we do it for kids, and we also like we give special discounts to kids that come in, because it's not like it
that was my
for
next question.
Yeah,
that was
it's different.
what I was moving into.
Yeah, it's definitely like much more swallowable. So we set it up for kids up until so we would have like a special come in rule, right, for like $299 for a kid to just get it up, and it'd be annual per year. And then once they hit 18, they would just roll into our normal annual per year.
Got it. Okay, good. So that was the other thing. So with this account, they will still have the same service. And so it's almost like a pre-retirement account that you guys are setting up for them, but it's not really labeled as that. It's really like a shelter that you can kind of dump your money in, only up to 13.
Yeah, a shelter, like get your own personal write-off, right, on those taxes, but also grow something for them that you have total control over and that you could pull out when they need it.
So you need to start that account. What's the minimum?
I mean, nothing. It's really more to start contributing for them, right? So if they're doing work through your business, then you could 1099 them and say, all right, little Bobby, thank you for your work that you've done for me this year, whatever that is. I'm going to 1099 you. X amount of money for the year. And now I'm putting that into your account, which is now I'm going to grow that for you. Or you could put it in the stock market if you want to. You could go buy gold and silver with it if you wanted to. Like, you know.
I like it. Stephanie, you need to do it for my baby Kennedy.
Yes, I was just thinking about that as I was listening.
Listen, I'm helping all the mamas out on this call. I like it. I will be following up, and it sounds like Pam will too.
I just had this conversation with Josh last week. That's what we're following up this coming Thursday on this exact thing.
You know, I've been talking about this for a minute, trying to figure out how to do it, but this sounds like the way. I like it. Do you guys have any other questions now that I've monopolized everything? Feel free to jump in. If not, we're going to let Parker jump off because he has other calls that he has to jump on. Nothing? No, thank you. Okay, you are more than welcome. They said this has been extremely informative. Awesome, awesome. So you guys are going to be calling up, I'm sure, to inquire to figure out how to take next steps so you can get your money out and do what you want to do with it. That is a big plus for me. I love it. Well, Parker, we thank you so much for coming on. I know you have to jump on another call, so I don't want to hold you. You did drop your contact information already, right?
Let me go ahead and do that.
Okay.
And like we always do, we'll follow up with the email with some useful links, helpful links, including how to get the EQRP book. We have a direct link from our referral link, and the recording of this session, so you will have it and can refer back to it if we were talking too fast or if you missed anything. And we certainly thank Parker for his time. You're a hard person to get, but we're certainly glad that we were able to make this happen. This is some useful information. Nikki and I are all over it. So we hope everybody else can take advantage of the opportunity as well.
Yeah. And the thing, just leaving you with the big takeaway, right? There's a lot of information. Don't feel like you have to know everything. That's why I'm here. And Pam's situation is different from Nikki's. Melissa's is different from Stephanie's. So like, don't put your situation in somebody else's because it just looks different. And that's why we're here, is to really help coach you and walk you through. So the best thing you can do is just call me. My information's in the chat. I'm really active on LinkedIn. You can email me, or that's my personal text, my personal cell phone right there. You can call me too through that, shoot me a text, and we can schedule some time to talk. So I'm here to help, here to serve. That's what I'm here to do. Get that money out of Wall Street.
Yes, thanks, Parker.
Thank y'all so much for your time. Hope you all have a blessed day.
I will be in touch.
All right, bye-bye.
Bye-bye. Yes, so listen, we know that this is earlier for you guys. We do appreciate you pausing to come with us on a Wednesday at 6 o'clock. I'm sure it was in the middle of a lot of stuff. I hope you guys found this session extremely informative and that you guys are going to take advantage of the opportunity. If you don't have any additional questions or anything that you want to share with us, then definitely continue to be on the lookout for some nice, exciting things that we have that we're working on. And we'll be in touch. Did I miss anything, Pam?
No, I think I would just reiterate that, you know, oftentimes we have these calls and we talk about how to get involved in investing. And we've certainly spent a lot of time this summer talking about how to leverage business credit and use other people's money and take the opportunity to take that money and parlay it into some real estate investing or other investment opportunities. But this is just another way for you to do the same thing. If you have money sitting in a retirement account and you're letting, you know, those with those investment companies use your money to play in the stock market, you can take control of that money and you can invest it how you want to invest it and not let them use your money and tell you how you can use it. So that really is the play here for us. It's for us to help you identify other ways for you to get involved in real estate investing and showing you that you actually do have the money. The thing we hear most from people is, oh, I don't have any money to invest. This is to show you that you do have an opportunity to take advantage of money that you have sitting in your retirement accounts and mobilize it and get involved in real estate.
And grow it the way you want to.
And keep most of it from the tax.
Keep most of it. That is the beauty of, that's the one thing that he did not touch on. Now, I mean, you know, if you call and schedule some time to chat with him about it, he'll get into the weeds with it, you know, with you on everything. But the beauty is, because you have the control to do what it is that you want to do with your money, obviously, if it sits, it's just going to sit and that's what it's going to do, right? You're not going to lose anything either. But if you don't play with it, it won't grow either. So you definitely have to take some chances and take some risk on yourself and look into things that may be of interest to you, like that strategy. If you have kids and you have a business that you're running, and I know that my baby is helping in that business, you know, I know she talks to me about it all the time, right? Why not get her one of these little accounts, throw off 13K, I think it's 13.5 if I'm not mistaken, into an account for her that is going to give you a write-off on your business at the same time while you're growing money for her. It's a win-win to me. Like that strategy is just, I've been talking about that strategy for some time and I've been trying to figure out how to make it work. So when he told me, when I heard him say K-Roth, I said, uh-oh, let me see what this is. This is the first time I've heard about that account. Because I've been trying to figure out how to make it work. So I'm excited about that. Something that y'all want to take advantage of if you have children, for sure. That's under 18. All right. Well, you guys have an awesome evening. I'll get in contact with you offline so we can set up some time. I'm finally back in the loop. And I'll talk to you guys soon. We love you guys. Ashe.
Thank you.
Thank you so much.
Thank you.